Sincerely speaking, it is more difficult to grow a small account than to trade in a big account. I have to be very honest. Throughout my trading experience, one thing stands out, that growing a small account is very, very difficult. So if you know you want to grow your small account to a big account, then this video is a must watch video. I'm being very honest without any kind of hype. I'm going to show you a simple strategy that you can use to complete your challenge. Now, to do so, I'd like to leave you with the basis. Now, the basis is that you should not risk too much, but if you don't also risk, you grow very slow. That's just the point. So growing very slow is not a problem. Risking too much is not also a problem, but at a point you start the risk. So I'm going to guide you how you can grow a small account from $20, $30, $100 to $1,000. If you look at the particular account I'm actually using, it's one of my small accounts, which I started growing it yesterday. Yesterday I started growing this particular account from about $12 was when I started growing this account between yesterday and today, and it's still growing. Now, the one thing that is there is that it's not that I don't have losing trade. I do. I also have winning trade. But my secret behind this is that whatever I lose is small as compared to what I gain. So that's the risk. And the ability of you always catching this sniper entry, this kind of entry is called sniper entry. The ability for you to always catch this kind of sniper entry is very difficult. So I have a skill I discover, and I feel that if I don't share it with people, then it's more or less I don't love people, I don't like you. And being the fact that you are my viewers, my students, my followers, so I think that the best set of people to share this strategy is with you, because it will definitely going to help you. Okay, so it's quite very simple. I'm going to share with you. So the first thing first is you need to understand that in forex trading there are two things that happen. It is either you win or you lose, period. No excuse, nothing more, nothing less. If forex trading or any trading is like a business, it's either you make sales today or you did not make sales today. And if you don't make sales today, you might either run loss. It's like you're playing football match. It's either you win or you lose. That is it. So I want you to have that mindset already. But yeah, since it is either we win or we lose, now the major concern is going to be in the volume of losses. I am always interested on how much I lose, because that will pay me more. Yes, I'm being very honest. No matter how much you win, when your losses is too big, it will hurt you a whole lot. There was a day I had, like, I don't know, my whole head was turning upside down because of the losses I had. So because of that, I know how painful it is to lose. So I'm always very concerned about what I'm going to lose against what I'm going to gain. I'm actually using Octa Trader. I love trading with Octa platform specifically because to me it makes things simpler for me. For some reasons, I can analyze my trade here, I can execute my trade here, I can do everything here. Either I'm going to MT5, going here, but you can still do that. This everything I'm going to show you here is the same. The first thing first is you come to chart. When you come to chart or trader or trading, depending on how you see this particular place, that's the first thing you're going to come and check. Now when you come there, click that place, and they're going to show you different kinds of assets or instrument depending on how you may call. This is gold, XAUSD, this is BTC, this is USD, Euro USD, this is Ethereum, this is USD JPY. All of them, just go through all of them carefully. Watch what I'm going to do. So when I do, the first thing I'll do is I'll come and check. Now what am I checking? I'll go through all the charts and check. This is gold, so this is gold here. Now what I'm going to check is where is the best place to enter this trade that is going to give me the best profit. Okay, so at this point I would love to clear everything here, so you can see how you can start making growing small account into a bigger account. This is what we're going to discuss today, how you can grow a small account into a big account. So kindly watch what I'm actually doing right away. So I want to clear this chart so everything can be clear for you to run through. So now currently this trade is like this is how it is now. So I want to enter this trade in the best place that what I'm going to lose is going to be small as against what I'm going to gain. So if I enter buy, currently this trade is at this point. You see where I'm marking? That's where the trade is right now. If I click buy or sell at that point, it's risky. Now the first thing is that understand that in an uptrend, which you can see this is an uptrend, this is literally uptrend. In an uptrend, our job description is simply to buy, not to sell. But at this point that the candle have gotten to this point, most people would like to sell. They would like to sell, but it's risky because you do not know if truly this candle will sell or it will break this point and keep going. Nobody can tell. So the best thing we'll do is simply to wait. We'll wait for it under here so that we can buy since it is an uptrend. So literally, I'll pick my trend lines. That's my trend lines, just like you can see. So that's my trend line. Good. I just want to show you this strategy. Watch this strategy very well because this strategy is going to help you enter the trade. Now, I am to enter the trade at this point where I notice that the candle hits this. This area. Why am I entering the market there? So that my stop loss will be below. Let me use black to mark stop loss, and my profit is here, so I'm aiming here. Now, in this particular challenge, in order for you to be able to grow a small account to a big account, you need to cash a sniper entry. So what I'm going to teach you in this particular video is how to cash a sniper entry. So that's what you're going to follow through. Remember that the red line we are marking red is entry point, and we are marking black below is stop loss. We are marking black above is take profit. Simple. Now, marking this is not a problem, but being able to cash the candle at that point, being able to cash your trade at that point is the major problem. That's the major problem. So to do so, first thing first I'll do is I'll mark all of them and keep. I'll take lines. Lines are in this place. You see this particular place, that's line. Then inside here, that indicator. Today is not a day for that one. So we'll go to something else. So I'll pick lines, horizontal line. I keep the horizontal line at a point that if the market break the structure and hit that place, I should be out of the market. And that red line happened to be my stop loss. If the market go to hit stop loss, I should be out of the market. Now, I'll pick another line. I'll pick another line, horizontal line, and keep at my entry point. At my entry point. Please watch what I'm actually doing right now. And I'll give that color like, let's say blue color. Then I'll pick another line. I'll pick another line. Let's say that this one could be like and keep at my take profits. Let's make that one green. So that should be my take profit. Please, why I'm taking time to do this video is because I want you to have a better understanding, and I want you to smash this challenge growing a small account, because this is a big problem that people have. Trust me, it's much easier to trade with a big account than a small account. I am telling you this from personal experience. If you have a big account, you can trade with confidence. Even when you lose, you don't have BP. But if you have a small account, a little thing, your mind is jumping. More thing, your mind is jumping. Honestly speaking, it's very stressful growing a small account. This is personal experience. I'm being very honest here. So for that reason, I like to expose this secret to you. So follow through so you can understand. So now, if you notice that the market is almost at my take profit, but I want to enter the market at the blue line, where the blue line is. So I do not know when the market is going to get to that point. So what you need to do at this point is known as buy limits. I know you know buy limit already. Yes, or pending order, depending on however you might like to call it. So since you might not be able to stand and wait for it at all time, you put a pending order and put a stop loss and a take profit. This is very, very important because you cannot tell anytime the market will get to that place. So you go to your order. At this point, just look at the market now. Now, let's assume I want to enter this trade. So what you need to do is consider your volume. I hope you know what is volume. This is volume. Good. Or lot size. So I want to enter this trade, and let me reduce my lot size to 0.02, for example, or 0.01. So I'm going to use 0.01 because I really don't know how your little account is. If you have any small account, please maintain 0.01 to 0.03. It shouldn't be higher than that. So that's the first thing I'm going to do. The next thing I'm going to do is I'm going to place a trade on buy limits, pending order. Now, why pending order? The reason I'm placing this trade on pending order is because I want to get a sniper entry. I want to always get a risk to reward ratio of 1:2 or 1:3. That's the first thing. 1:2, 1:3. If you want to grow a small account, you don't need to enter all the trades. It's not all the setup you enter. You must always make sure that you get 1:2 or 1:3 or 1:4. The reason is because you're not going to win in all the trade. Let me show you what happened in my trades today. This is today's trade as in this small account as at this time. So look at the trade I've already closed today. Now, if you look at this trade from morning time, I've been on this trade. This is today. All right, from today, yes, this is it. Now I closed BTC $11, closed Ethereum $10, $8, BTC $4. But here this one hit SL $6. Why this amount does not really affect me is because what I lose is small. I want you to look at it. This one hits SL at break even $14, so that one is not a problem. This one hit SL $6. Again, this one is on break even, so that's not a problem. Now this one $10. If you look at what I'm losing is just most time in this account is $10. Why is so? Is because I am getting a sniper entry. Why I'm aiming to get big. Now most of this trade you see as I close them without reaching the time is when I see that okay, maybe I'm in profit, but it seems the market is coming down, so I have to close, just like this NAS 100 you're seeing on top there. So I was aiming at $40, but I see that the market is coming down, or at $35. I see that the market is coming down, so I have to close it and save my profit. But that's by the way. So why am I explaining this to you is because you're not going to be winning in all the trade, but if you can have a sniper entry of 1:2 or 1:3. Example, when I say sniper entry, this is literally what I mean. This is literally what I mean. You see, like this gold now. You see, like this gold. Right now, we are standing. This is where the market is. The market is at that point. But if we can enter this trade at this point, so the whole of this will be our profit. And if we should lose, this is what we stand to lose. You understand the point from the angle? If the market should go against us, that means the market has violated the structure. It's now going against us. It's now below the previous candle, below another candle here, and still come down. So at this point, it should close us. If the market get to this point, we should be close out of the point, out of the trade. That's the goal. So in order for you to grow a small account, listen to this part, note this what I'm saying. In order for you to grow a small account, you must always enter at a sniper entry, and you need to watch it on your own. So you will not be able to sit down and monitor the screen all the time. So the best thing you do is you have a buy limit. Set a buy limit or a pending order, depending on how you're going to call it. Set a pending order, whether it's going to be a sell or it's going to be a buy. So now this is the structure on setting a pending order. If you're setting a pending order on an uptrend, it should be a buy limit. If you're setting a pending order on a downtrend, it should be a sell limit. The goal is because you should trade according to the trend. Never you trade against the trend. You should always follow the trend. That's the first thing. So like this one that is here, we're having an uptrend here. So since it is an uptrend, we don't know how high it will be, but we know where the market frequently stop. So we believe that this candle can come down. This particular candle can come down. That's the first thing we believe. We believe that candle can come down, and it has been coming down. So what we are going to do is what I've done already. We will wait for this candle. As soon as it gets to this point, it should open our trade and start running. So what if I am not with phone? I don't need to sit down and monitor the phone 24/7. Monitor the phone 24/7. So all I need to do is I place a buy. Look at what I'm placing now. Buy. I click this buy. Hope you can see this place. Good. So that's buy, or depending on the instrument, all you need to do is just set a pending order. So I click buy. So when I click that buy, you can see pending order and market order. Okay, remember your volume is your lot size. Either you call it volume or lot. Make sure you see your volume very well, that is intact. This volume is not too big. So the first thing I do is that once I get to this point, first thing I'll switch to pending order. So as I click pending order, when I click pending order, look at where this market is at this point. Look at where this market is at this point. So I'll simply bring the pending order to where I want the market to be. That's what I'll do. So I'll carry this pending order to where. Now I am telling this market that once market get to this place, initiate my trade even at my absence. This is what robots are doing. Once market get to this place, initiate my trade even at my absence, even if I'm not there. I've said that. Now the next thing is I also set stop loss. This SL, you can see this SL here. Good. I'll pick the SL. So I'll now take it to this place. Now where I want to keep says that this is where I want my SL to be. It says I'm risking $14. So I'll take it to where that place. I think I'm fine with that place. That place says $9. So why $9 is because for two reasons. One, I do not expect that this trade will go below this place. If it should go below this place, it has break the structure. I hope you can see. That's the first thing. So the second thing is I may not be there when the market is going on. So if the market is going on at my absence, then it might go against me. It might go in my favor. You know that now. So if it does not go in my favor, it should close. It should close at SL. So I am willing to risk the X amount. You get it? Now this is at 0.01. If I take it up here, it's wrong. You get it? So I need to keep it under where I say that the market, if the market continues to that place and goes against me, then I'm willing to lose that $9. Then I'll put my take profits here. So I'm aiming to make $22 and I'm willing to lose $9. Now this has been set already. So since this has been set, the next thing I'm going to do is I'll click place buy limit order. Did you see where they write place buy limit order? Place buy limit order. Now sometimes you might make mistakes and this volume is big. You can reduce it here. I can increase it there. At this point I'm already at 0.01, so I cannot reduce it again. The only thing I can do is if I want to increase, I can increase. But note that as you're increasing, your stop loss and your take profit are increasing. The amount is increasing. So that is volume. Hope that part is clear. So at this point, I'll not increase. $19 is too big for this account for me to risk. So I'll just leave it at $9 and click place buy limits right now. So I've placed that. So now, in case I'm now waiting, what I'm doing is that I'm waiting to get a sniper entry. Remember, I told you that we do not chase the trade. And aside from chasing the trade, we do not also predict. What we do is we react. Now we are waiting for the market. As soon as the market gets to that place, whether it's in this candle or in the next candle, it will initiate the trade. Now we can also go in another one. I'll go through other instruments and see what they are doing. If they are doing well, if they are doing what I can enter the market, I'll enter. If not, I'll wait for it. That's just the point. I'll go through another one. This go through them and see one by one, see what they are doing. Okay, if what they're doing is favorable, I enter. If not, I'll step out of the market. So someone can ask me, how do you know what you're doing is that doing if it's favorable? Very simple. If it is the market is too far, the chances of it to reverse is slim. That's the first thing. Yes, that's the first thing. So if you look at this gold, it's coming down, it's going up, it's coming down, it's going up. Hope you understand it. So the point is that, is it at a point I can wait for? Is it realistic that if I wait for this candle to come down? Yes, on this particular one, it's realistic. But let's go to another one. Let's go to this Ethereum. Let's go to Ethereum. Look at the height that Ethereum is carrying. And look at this part. To this part. It's not realistic that it will come down. Is it possible to come down? Yes, it's possible, but it's not realistic. So you understand now. So while I'm showing you this is because I want you to place your trade at a sniper entry. Instead of me at this point clicking buy or sell, because at this point we don't know if this market will continue to go up. It is possible to go up and we don't know if it's going to reverse. Some people will tell you sell. If you might click sell and the market is going up. Some people might say buy because it's going up, there's pressure, and you click buy, the market start coming down. So the only thing I'll do is I'll wait for it and mark my stop loss, mark my take profit, wait for it at a reasonable place that if the market gets to that place, I should make profit. It should initiate me. So with this, all you have to do is you simply go to the market and check all through the assets. Check all the assets in the market. When you check all the assets in the market one by one, US 30, check all of them carefully. When you check all of them carefully, is this something reasonable that if you enter the market at that point, it's going to retrace or it's going to go back or it's going to come and hit your point? So the goal here is, let me summarize because this video is already long so you can understand. The goal here is, if you want to grow a small account, you need to wait for the market to pull down to the place that if you lose small. Your losses is not bigger than your profits. You lose very little. You need to wait for the market. Let me emphasize this part. The goal here is you need to wait for the market at a point that if the market goes against you
what you lose is small. That's the goal here. And when you enter the market, what you make is big. Since you'll not be able to be waiting for the market at all time to pull and come and reach you, the only thing is you set a buy limit or a sell limit or a pending order, depending on how you're going to call it. You set a pending order and leave it there. So anytime the market gets to that place, it will initiate the trade and you be in profit. And that's all. I hope you've learned something from this particular video. If you've learned something from this video, please like, share, and comment. Tell us what else you want to learn in Forex trading. Then I'll make a video on that for you. See you at the top. Happy trading.